Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I get to today's guest, I'd like to thank our 2023 President's Council sponsors. And these are companies that have provided a tremendous amount of financial support for our association to help us stay strong as the voice of the real estate finance industry in California. So I want to give a big thanks to AmeriHome, Arch MI, Consolidated Analytics, Incelerate, Funding Shield, Guild Mortgage, Rocket Mortgage, and Western Alliance Bank. Thank you all for your continued support for the California MBA. We greatly appreciate that. And with that, I'd like to turn to today's guest. I'm very happy to be welcoming Keith Lind, CEO of Acra Lending. Keith, welcome.
Thank you for having me, Susan.
Yeah, it's been, I think we talked about this at Western Secondary Market Conference last year, so it's been a minute for us to kind of get our schedules together on this, so I appreciate it. I know it's a busy year.
No, absolutely, and again, happy to be here.
So I always like to get started with hearing about how people got into the mortgage industry. So tell us how you got started.
So I was lucky enough after graduating Purdue University in 2001, I got invited to a leadership clinic through my national fraternity. And there I met some headhunters, and one of the headhunters was in touch with an employee at Bear Stearns who was involved with our national fraternity. And really it snowballed from there, where we had a conversation. And my goal was to move back from Indiana back to New York City. That's where the opportunity was. And after some long, hard interviews, I was able to land the position. Wow,
that's those chance meetings that mentorship opportunities or just networking. That's really can change the trajectory of everything, right?
It is. It's I always say hard work creates opportunities or luck, and I think being able to get invited to that leadership opportunity really provided that opportunity to have that interview and also lead to the job at Bear Stearns.
There you go. And now, as they say, the rest is history. So you've had a long history in the mortgage industry at this point. Like you said, it's like into it 20 years. 2023, definitely a tough year. How can a company stay competitive in a market like this?
I think for Acra, we managed the risk in 2022. I think it starts with managing risk, and you need to be set up. You need to set yourself up sort of through the tough times to be successful when things start to improve. And in 2022, we had our core employees, people that have been with the company for, some of them longer than 10 years. And we got through 2022 with what I'll say is our core group. We did have layoffs, but now we're able to hit the ground running in 2023. And it's leaning on our 70 salespeople that have been with the company for a long time, that have developed very strong relationships, and also being relevant, right? People know that we're fairly well capitalized as a mortgage originator. We've had no issues funding loans. I think our rates have been fairly competitive through all of the volatility through 2022, and that gives us the opportunity to be competitive on rates today. And we're funding loans, and it's 2022 was tough. There was people that obviously went out of business, or people that had trouble funding loans. So I think the stability and the nature of the tenure of all of our employees is helping us gain market share.
Yeah, that's kind of how Acra stays. You say that's how you mostly stay competitive against your other players in your particular non-QM market.
Correct.
Yeah, that ability to fund the loans, right? Boy, it's like this is just a tough year. I had this job through the financial crisis, and every now and then I wake up going, it's not going to be like that, right? I mean, I know it's not, but it's just, when I hear so-and-so is going out of, correspondent or exiting this part of the market, it kind of makes me gasp a little bit. But yeah, definitely good to know, well-capitalized company and somebody that, could be a strong business partner.
Yeah, and I think just to add one point to that, there was multiple situations across, whether it was agency originators or non-QM originators, other private lenders, where people weren't honoring their rates. They would lock, but then they couldn't honor the rate because interest rates were moving so fast.
Right.
And I think we take pride and we honored all of our locks in 2022, and that built a lot of trust and confidence in our broker base to keep delivering business to Acra.
Right. What would you say some of the opportunities are in today's market for the non-QM lending space?
Well, let's just separate it. I think, let's go back to 2020 or 21, where the market was driven by agency originations. And, a lot of the big brokers that we deal with weren't focusing on non-QM. And it was more difficult. Now, I think refis are down 65 to 70%, purchases are down 30+%. Now, we're put in a situation where brokers want to focus on non-QM because that's an opportunity to fund a loan. Right? Whereas back in 2020 and 21, they had the low-hanging fruit of agency.
Right.
Non-QM loans are a little more difficult, more steps in the process, but they know they can make money closing non-QM loans. So I think the biggest thing that we're seeing is just, a revived focus from all the brokers to focus on non-QM, which has been very refreshing.
Right, just another product to offer. I know that I hear that from my lenders. It's like, look, right, like you say, funds stop ringing. We're not doing these free, easy refis any longer, obviously, and won't be for some time. So they're just looking for that additional products to offer customers.
Absolutely.
It's interesting how that non-QM market has kind of ebbed and flowed over the last handful of years, but it is always there. It's the right loan for the right, for that right borrower.
Yeah, and if you look at what's happening in non-QM, I think there's a learning curve to understand, the products that fall under non-QM, and it's been it's a learning process. And I think more and more brokers are starting to, educate themselves on what the opportunities are. And then you look at, about 15 to 20% of people fall into the non-QM sector. But you look at the sectors that fall under non-QM, the gig economy, Uber drivers, self-employed. There's, a lot more people want to be self-employed. They don't want to work in big institutions. So you've got this entrepreneurial attitude. All those borrowers are going to fall into non-QM. So we think the tailwinds for non-QM are super strong, and it's going to be a growing business moving forward.
Yeah, exciting times. So, it's one thing, being a leader during, hot markets, certainly much different than in challenging markets like we were seeing in 2022, 2023, especially. What are some of the leadership values that you can share to help leaders navigate this type of a market?
That is a great question. I think for us, it's been transparency. And I think it's again, 2022 was an extremely difficult year. And there were situations when we were changing our guidelines or making different prices in changing in rates, but following the letter of the law of what our contracts say. And I think for us, it was just being transparent, delivering maybe the tough news or the bad news when it had to be delivered, not hiding from it. But more importantly, honoring the programs that we're offering to our customers.
Yeah, and that transparency, I'm sure, very appreciated in a business partnership.
It is, and it's it's just tough news, but I think at the end of the day, people appreciate that because when people do go radio silent or they're not calling you back, that's even more frustrating because they don't know if the deal is going to close. Does this opportunity even exist anymore? But and I think as leaders throughout the company, we were very hands-on, and that means myself or managers getting on the calls with brokers or our retail clients or corresponding clients to have that tough conversation. And I think they appreciate it coming from senior people to walk through what the situations are and how we've handled them, but the fact that we still are honoring our rates and we're funding loans. Right.
No, that's great advice. We started out our conversation, you talking about how you got into the industry, kind of went to, suggested go to a leadership, leadership event. You've had a long history, career in the financial services. What advice would you give to a new entrant, young mortgage professional entering this market or industry rather?
It's a great question. So there's a lot going on in the mortgage industry, and I think a lot of it revolves around technology, and the way we can communicate better find more leads faster, right? Go back to the old days. You had a Rolodex. You were going through yellow pages.
Yeah.
You were fumbling around with business cards. And I think to any young professional today that's going to get in the mortgage industry, depending on where you are, and but I'll just use sales as an example. I think that's the best example. Is leveraging technology to promote not only your products, yourself, your company, the success of your company, because technology is just changing so fast for the better. I still think the mortgage market lags, and we're getting better at it. But I think if you're coming into this business and you're going to be in sales, there's just so many platforms that you can leverage to reach new potential borrowers or new potential brokers. And the people that don't do that, I think, are just going to struggle. The people that can take advantage, think outside the box, and leverage these technologies, I think if you could do that, you could be very successful in this business.
Yeah, that's we launched mortgageinnovators.com a few years ago, and it's really just it's really taken off. And to your point, I think successful people that are successful in the mortgage industry are leveraging all the technology solutions that are out there, because there is just an abundance of them, and it seems like there's new ones every day.
That's right.
Well, Acra has been just a big supporter of the California MBA, and Keith, I want to thank you so much for that. We can't do what we do from an advocacy standpoint unless we have the support from companies like Acra. But can you share with our listeners why you choose to put your sponsorship support behind California MBA?
Yeah, well, it's the endless amount of great relationships that we've formed through partnering with you. And that's something that when I stepped in here, and one of the big initiatives that we had is partnerships matter, and it leads to not only friendships, but it leads to business. And for us, the consistency of showing up at your events, meeting not only what were new friends but now old friends, that's been great for Acra. It's been instrumental for our salespeople to keep growing and to bring in new business, and something that we look forward to partnering with you for a very long time.
Well, we really appreciate it, and you've got a great team to work with. I really appreciate working with the folks at Acra. So, Keith, thank you for joining me on today's Connect episode.
You're very welcome.
And thanks to all of you for joining us on Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week on Connect, and we'll see you next time.